What's going on, YouTube? Chris here. I want to bring you all an update today of Bitcoin. And what I want to do is piggyback off the last video that I did when we were looking at Bitcoin on the 4-hour time frame. And what we were talking about was price was going up, and we actually had that negative divergence. The RSI was going down. And guys, we were talking and warning about a little bit of a dump that potentially could come or a retracement, and we ended up getting it. And I think this is extremely healthy for the market. I know a lot of people go, oh, I want to see it keep going, straight up the side of a skyscraper, but I don't want that. I want Bitcoin to take these big, deep breaths. It's healthy for the market. We need these retracements. And if we expect to get over $20,000 all-time highs and have clean, strong blue sky breakouts, this is exactly what we needed. So what I ended up doing, guys, I actually took profits and then I started rebuying yesterday. And the reason why I started rebuying, I wanted to buy this dip. It was a significant dip. And also on the 4-hour time frame here, you can see we had these tweezer bottoms. And a lot of the times when you get those tweezer bottoms, we've talked about it before, even down to the 4-hour time frame, the 1-day time frame, when you get those a lot of times, that can mark the bottom here. And it was right up above this 200 moving average, as well as the support area we'd been looking at for quite a while at 16,356. And guys, I had a lot of people when I was talking about this when we were close to $20,000 there, and I said, we really need to retrace, and I would like to see us back to 17, 16,000. A lot of people made fun of me and said we're never going to go back to that area, but this is price action. This is how it works. This is what you want out of a healthy market. Look back here. After we made an explosive move, we gave more than half of it up, and we tested that previous resistance, turned it to support, and kept moving. It's very healthy for markets to breathe, and that's what we want in these markets. You can see we went down about 11% there. So over here, we ended up going down roughly about 17%. This is typical. In the last major Bitcoin bull market, we were seeing retracements of 30 or 40% before we started ripping again. That's what happens in this space, and it's different. It's different than what you'll read in all the books, because guys, I've spent so much time reading books and learning technical analysis and all this stuff, and about 80% of it's very similar, but cryptocurrency is its own beast, and that just is what it is. It truly is. Now, if we take a look at the Fibonacci here on the 4-hour time frame, I want to go from our low up to our high. And what you can see is we've retraced down through the 0.236. The next area we would have looked at is at 0.382, and that is at $15,806 would be the support area that I'd be looking at. And I want to take this from the last dump that we had. So this would be our swing low up to our swing high there. And it's always nice to look at the 0.382 is the hot spot, even down to that 0.5, and that would be at 14,656. Main area I want to hold, though, on the 4-hour time frame, what I'm really paying a lot of attention to in white is our 20 EMA, or I'm sorry, our 200 EMA in white. And the importance of that, since we broke out of this symmetrical triangle, we've been trading up above that 200 moving average since October 8th. It is now November 27th. So the fact that we've had support off that and stayed up above that the entire time, we wouldn't want to start having candle closes below that. But what you can see now is the RSI is at 36, so it's lower now. We've had that climax volume sell-off. So there's many things to me that are saying this could be a great opportunity to pick some up so that you can ride it up to potentially challenge that next all-time high. The MACD right now, you can see the histogram starting to get a little bit better, but we still have not had a positive cross. But you can see the same deal, this divergence, lower highs coming in here on the RSI and the MACD while price was going up, and that was a big warning sign to me. So that's why I try to put that stuff out there for everybody and to show you that technical analysis works. I think it works better than fundamental analysis by far, and that's just my opinion. So if we take a look here, we're trying to hold this 20 EMA, which we've been up above. Remember, we talked about this, guys. If we start having serious candle closes below that, we may have to look to the next support area, that 50 moving average there, and that would be at 15,175. So this is an area I'd just say to be a little bit more careful, a little bit more cautious. The RSI is at 53. We're getting a MACD cross to the downside there, but this was very powerful to the downside. So many times I'll take the indicators pretty quick with it, and you can see it was on climax volume. And if we take a look here again on the 1-day time frame, do this Fibonacci here, give you a little bit better clue. We've been so strong, guys. I mean, we just broke down through the 0.236. Typical retracements are that 0.382, 0.5, even down to that 0.618. That would be all the way back around 13,535. But for me, I just thought it was a smart spot to start slowly layering back in from the profit that we were taking up here when we saw these tweezer tops. So that's what I want to bring today. Really watch these areas, guys. Overhead resistance, see if we can get up above 17,262 is going to be the spot. Support 16,356 are going to be the areas that we're going to look at. God bless each and every one of you. Take care, my friends.